Hey everyone, Couch Investor back to another video for today. So, NIO reported quarterly earnings, announced some changes with regards to the battery business. The stock market liked what they heard. The stock currently is up 6%. During the day, it was closer to being up 10%. At the time of making this video, the market cap is $14 billion. Year to date, it's down 19%. And since last year, it's down 40%. But in the last 5 years, of course, when you look at revenue, that has not really been an issue. The company generates more and more revenue, although in the last couple of quarters, revenue has been flat-ish. When you look at the profitability side of the business, this is where the problem lies currently. Free cash flow has gone down, down, down. Gross profit margin has peaked back in 2021, we went from close to 18% to now 4.47%, but there is some improvements. More on that later on. Then we look at return on equity, return on capital. Both of them are still negative. Now I know there is a growth story to NIO because if it does work out at a $14 billion in market cap, of course there could be a lot of upside. I mean, if you look at the other automakers, their success story or maybe the current drive to the success story, $14 billion for a company that is trading at around 1.5 or so price to sales ratio. There could be a lot of upside. Chinese company, big Chinese player, I mean in the Chinese market, I would say, could be a good bet. Now, would you be comfortable holding it for the long term? I don't know, remains to be seen. I mean, remember when NIO was at $60, people were already talking about it being the next Tesla, etc., etc. Since then, we had a major crash. Profitability went out of the window as well. But focus is changing a little bit internally, and I think investors are liking what they're hearing. Now, before jumping into that report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So during the earnings call, they talked a little bit about the cost cuts, improving the bottom line. So they say here, for example, if things cannot contribute to gross margin or the P&L, they may need to be deferred or reconsidered. So, for example, they're saying this: we've identified that in the coming 3 years, bringing battery production in-house will not help us with the gross margin improvement. In this case, we have decided to defer the plan. We will still continue to do the in-house R&D of battery cells, battery materials, and battery packs, but we will outsource the manufacturing of the battery packs for better overall efficiency and performance. Which obviously leads me to this article right here. So NIO to spin off its battery production unit. So this is part of the effort by the company to turn profitable, reduce cost, and improve efficiency. Apparently the spin-off could take place as early as the end of this year, after which the battery unit will seek outside investors and a valuation will be decided at a later date. The spin-off underscores NIO's effort to turn profitable sooner, as the company's previous plan was to develop and manufacture some batteries on its own and outsource the production of the rest to other suppliers. Now again, this should be very, very positive for investors. You don't want this company to burn even more and more cash and then try and raise more funds and dilute you further. This is the right move in my opinion, and I've been critical of NIO in the past, especially as they focused on that useless stuff, NIO lifestyle, stuff like that. I mean, NIO phone came out, it doesn't make any sense to me, but this should be very, very positive for investors. Then if we go and jump into the report, so vehicle delivery, very, very good quarter. 55,432 vehicles were delivered, consisting of 37,585 premium smart electric SUVs, which is the biggest chunk for them, and 17,847 premium smart electric sedans, representing an increase of 75.4% in the same quarter last year and an increase of 135.7% from the second quarter. I mean, they had a big goal for this year. Obviously, that did not work out. We've talked about that already in the past. We've seen some improvement back in Q3 to Q4 of 2022, but since then, I mean, Q1 2023, we went down quarter over quarter, went down another time in Q2. Of course, they launched new models. And so that's one of the reasons why we're seeing an increase right now. But for next quarter, they're already expecting a decrease. More on that later on. So, vehicle sales came in at $2.38 billion this quarter, representing an increase of 45.9% year over year and an increase of 142.3% quarter over quarter. Vehicle margins also improved, came in at 11%, although still down from the 16.4% same quarter last year, but an increase from the 6.2% in the second quarter. Total revenues came in at $2.61 billion, representing an increase of 46.6% from the same quarter last year and an increase of 117.4% from last quarter. So as you can see the trend here, we are seeing a big increase quarter over quarter since last quarter was a pretty weak one. But when it comes to revenue, we are also increasing. Like I said at the start of this video, revenue was not really an issue for that company. The margins, the profitability, and especially the deliveries were an issue. Now, when we talk about gross profit, that decreased 12.2% from the same quarter last year, but here you can see an increase of 1,650.9% since Q2. Gross margin came in at 8% compared to 13.3% same quarter last year and just a 1% in the second quarter of 2023. As for the loss from operations, that was $663.9 million, representing an increase of 25.2% year over year, but a decrease of 20.3% quarter over quarter. Net loss was $624.6 million, representing an increase of 10.8% year over year, but a decrease of 24.8% quarter over quarter. Now, here we get maybe a better visual. As you can see, vehicle sales increased quarter over quarter, year over year. Vehicle margins year over year, although still down quarter over quarter, a big improvement there, of course, as they produce more and more vehicles. That should help margins. But right now, cost of sales actually increased 55.7% from the third quarter in 2022 and also increased 102% quarter over quarter. Why is that? Well, they say here the increase in cost of sales over the second quarter of 2023 was mainly attributable to the increase in vehicle deliveries, provision of power solutions, and sales of charging piles, partially offset by decreased volume of used cars sold. Now, of course, like I said, usually when you increase production, when you increase deliveries, usually your cost of sales should be trending down. In this case, it went up because they delivered more vehicles. That's the exact opposite of what was expected. Now, this might be explained because of the launch of new models. So, okay, that's still baked into that. Could be. But usually when you increase sales, you increase production, these things should not be happening. This is something to keep an eye on because, yes, if they can increase deliveries each and every quarter, but cost of sales continues to go up and up and up, what's the point? Moving on to what the CEO added here. So we have recently completed a thorough review of the company's 2-year operating plans to determine our objectives, priorities, and action plans. Meanwhile, we have identified opportunities to optimize our organization, reduce costs, and enhance efficiency. Our focus remains on advancing core technologies, developing key products, and expanding sales and service capabilities. We are confident in NIO's long-term competitiveness in the smart electric vehicle market. And so we have to go and look at the business outlook. So deliveries of vehicles to be between 47,000 and 49,000 vehicles, representing an increase of approximately 17.3% to 22.3% from the same quarter last year. With regards to total revenue, that is also down quarter over quarter, by the way, they expect it to be $2.2 billion. This quarter was $2.6 billion. That represents approximately an increase of 0.1 to 4% from the same quarter last year. And so if we go and look at the graph right now, it does seem like $7 is a support, a nice base to build up upon. Now, this week we have that big green candle because of the earnings report, because of the plans of cost cuts, stuff like that. We got that green candle, but currently we are being rejected at the 50-day moving average, believe it or not, but the 200-day moving average is at around $10. Yes, the stocks do love round numbers. A support at $7, 200-day moving average at $10. We got rejected back in August 2023 at $15. So again, yeah, the market technical analysis, sometimes it is weird, but fun to watch. Now, going forward, if they can finish this week strongly, maybe even over that 50-day moving average, could prove that this stock suddenly gets a bit more momentum. Don't forget that next week, CPI, PPI report, Jerome Powell speaks as well. That can make or break the market. But currently, to answer the big question, has NIO bottomed? Is it a buy right now? I mean, at the price we're at today, again, the risk reward here is much better than when it was at $40 or $60 or so, especially now with the announcements of being a bit more responsible, going for that profitable way of operating. Things should get better from here, especially at around $14 billion in market cap. Now, if you're just buying NIO because you want to find the next best shiny thing or something like that, yes, maybe try it as a trade, as a long-term story. I don't know. It's still a Chinese company. We don't know what might happen with that. We've seen crazier things happen in the last couple of years. But yes, currently at that price, I think we have bottomed. I think the market is looking at this company in a more positive way, especially after the recent announcements. That said, like I said during the video, when you start producing more vehicles, when you start delivering more vehicles, usually cost of sales should come down. And if that doesn't happen, then maybe there is an issue with the production. You're not as efficient as you could be. Remains to be seen. Again, this is just one positive quarter. If you want to hold it for the long term, you need a couple of quarters of positive momentum. If you want to trade this, I think yes, NIO is extremely good for trades. So that will be it for this video. Of course, do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.